Hi everyone, welcome back to Support Guide. Today, we're tackling an issue that impacts millions of Americans: taxes on Social Security benefits. You see, nearly half of all Social Security recipients are paying taxes on the benefits they worked decades to earn. That's right, you pay into the system your whole working life, only to get hit with a tax bill on up to 85% of those benefits when you retire. Let's break down how we got here, the proposed changes under Trump's plan to eliminate these taxes, and what it could mean for you. So let's start with some history. Social Security benefits have been taxed since 1984, and only one small adjustment was made in 1993. Here's how it works today. If you're single and earn between $25,000 and $34,000 a year, up to 50% of your benefits can be taxed. Earn more than $34,000? Then that jumps to 85%. For married couples filing jointly, those brackets are $32,000 to $44,000 for 50% taxation and over $44,000 for up to 85%. These income thresholds were set decades ago and haven't been adjusted for inflation. If they had been, today's thresholds would start at around $81,000 for singles and $103,000 for couples, so you can see why more people are being taxed now than ever before. Here's the deal: when these thresholds were first introduced, only about 10% of Social Security recipients paid taxes on their benefits. Today, it's closer to 50%. And why? Well, because the income thresholds weren't indexed to inflation, meaning more people got pulled into the tax brackets over time as incomes naturally increased. This wasn't likely an oversight. It seems to have been a deliberate political choice, effectively creating a stealth tax that grows with time. So, why hasn't Congress adjusted these thresholds to keep pace with inflation? Other parts of Social Security, like benefit payouts and FICA tax limits, are indexed for inflation. Yet, these thresholds remain frozen in time, and many argue that this policy places an unnecessary burden on retirees. For seniors living on fixed incomes, this tax can make an already tight budget even tighter. So this now brings us to Trump's proposal to eliminate taxes on Social Security benefits. While the idea has been floated and has significant support among retirees, it's important to note that this is just a proposal. It hasn't been enacted into law. Though the potential impact is significant, eliminating these taxes would cost the government about $950 billion over 10 years and could accelerate Social Security's insolvency by about a year, moving it from 2033 to 2032. It's a trade-off between easing the financial burden on retirees and maintaining funding for a program that's already facing long-term challenges. Now, let's talk about why this debate is so heated. Critics of the current tax system argue that taxing Social Security benefits amounts to double taxation. You paid into the system during your working years, and now you're being taxed again when you collect your benefits. This argument resonates with many, especially since Social Security is a lifeline for millions of retirees, 10% of whom live in poverty. For these individuals, every dollar matters, and taxing their benefits feels unfair. On the other hand, proponents of taxing benefits highlight the need for revenue to keep Social Security afloat. The program is projected to face a shortfall by 2035, which could result in benefit cuts of about 25%. While eliminating the tax wouldn't single-handedly solve this funding crisis, it would remove $950 billion in revenue, potentially speeding up the timeline for insolvency. So, let's put this into perspective with an example. Imagine a married couple with a traditional 401k. They're required to take a $50,000 withdrawal due to required minimum distributions, RMDs, and receive $1,500 each in monthly Social Security benefits, giving them $86,000 in total annual income. In this case, 85% of their Social Security benefits would be taxed, leaving them with a hefty bill they might not have planned for. Now, let's say this same couple had saved in a Roth 401k. Their withdrawals wouldn't count as taxable income, meaning they could avoid federal taxes on their Social Security benefits altogether. This highlights the importance of tax planning and having different types of accounts to draw from in retirement. So, where does that leave us? The debate over taxing Social Security benefits is about more than just dollars and cents. It's about fairness, sustainability, and ensuring retirees can live with dignity. Trump's proposal has brought these issues into the spotlight, but it's clear there are no easy answers. Should seniors have to pay taxes on benefits they worked their whole lives to earn, or is this tax a necessary piece of the puzzle to keep Social Security going for future generations? We want to hear from you. Do you think Social Security benefits should be tax-free? Share your thoughts in the comments below. If this video helped you understand the issue a little better, give it a like, and if you're new here, consider subscribing. And hey, if you know someone who might benefit from this information, share this video with them. Thanks for watching the Support Guide channel, and we'll see you next time. Take care.